This is the Scrap Metal and Commodities Recycling Report by BENLEE and Raleigh Goldsboro Recycling, January 30th, 2017. This is a special remote report because we are attending the National Demolition Show in Las Vegas. Last week, commodity and economic reports were mixed. Looking at the left of this chart, steel production fell a bit, but still remains well above last year as reports continue of slow global and U.S. growth. Oil was flat at $53 a barrel, but double the about $27 a barrel of last year. Oil rigs, which use major amounts of steel, had their count rise to 566 rigs, a great 79% higher than a year ago, which is supporting higher steel prices and jobs. Note 566 is still 65% lower than the 1609 high of about 2 years ago. Iron ore rose $3 to $83 a ton, which, like oil and scrap metal, is about double a year ago. Of course, higher prices are inflationary, which can be both positive and negative. On the left, we see scrap ferrous prices remain steady, but remain almost double what they were last year. All indications are prices will be down $20 a gross ton or more this week. Higher prices brought more material to the market, and exports remain okay, not good. So together, that brings lower prices. Hot dip galvanized steel rose to $858 a metric ton based on continued higher scrap and iron ore prices, as well as just okay demand. Stainless steel for scrap continues to hold at 36 cents a pound, showing many weeks of stability. Copper rose 8 cents to $2.70 a pound. Copper is holding much of the recent price increase that was speculation driven starting in early November. Note that the 5-year chart shows copper prices are about 40% higher than the low touched early last year. Copper inventories have been falling for 2 months, which will help support these higher prices. Aluminum fell a penny to $83 a pound on little news, and it remains up in recent months. Aluminum inventory levels have leveled off at somewhat low levels, which could support higher prices. New home construction remains a major driver of supporting higher commodity prices due to the major amounts of material used and high-wage jobs. December showed a major drop-off in sales at 10.4% to 563,000 annualized, but overall 2016 was the highest total since 2007. Importantly, the U.S. average from 1963 to 2016 was 651,000, so there's a major growth opportunity here. The U.S. economy slowed significantly in the fourth quarter after a solid third quarter and was 1.9% for the year. While this is almost a record-breaking 7th year in a row of growth, at 1.9% growth, that's too slow. Note, there was an average of 3.2% growth over the last 69 years, so there is room to grow faster. The U.S. Market Flash Manufacturing PMI, which is a rating of how purchasing managers feel about the economy, rose to 55.1 and is the highest reading in almost 2 years, which was driven by higher domestic demand, while exports remain weak due to the strong U.S. dollar. Wall Street's Dow Jones Industrial Average hit a new all-time high this week. The major wealth that has been created in recent years and months should have people spending more, which will support higher to stable commodity prices in the years to come. Consumer sentiment, which is how we feel about the outlook of the economy over the next 5 years, hit its highest reading in December since December 2004. This is a great reading that could bring great things to the economy. With that, we hope all have a safe and profitable week.